June 12th, June 11th, traded June 12th, $135 a share. Now, why would a company sitting on $100 billion and more of cash need to tap the corporate debt market? Bloomberg Intelligence writing that, quote, despite operational questions and considerable key man risk, they expect SpaceX's debt issue to be very warmly received. There's only one man for the job, Bloomberg Intelligence senior credit analyst Robert Schiffman. That's the story, right? Why would a company that has $100 billion of cash on hand do this? Explain.
Well, I didn't think I could be more bullish, but every day I wake up and show up at Bloomberg, I'm more and more bullish on AI. And I think this deal is just going to support that. You know, why do they need to raise more money? It's because over the next handful of years, they're probably going to spend a lot more than $100 billion. In fact, their free cash flow is probably going to be a lot more than $100 billion on the negative side. So they're going to need money because they're building the next hyperscaler business in space.
Let's go to the investor demand or appetite for this. We had reported even prior to the IPO that SpaceX had managed to get investment grade ratings from the three main agencies. And in your react, you basically say this is how we think they'll stack up relative to their hyperscale peers who have a greater rating still. Why does all of that matter?
Well, listen, nobody owns SpaceX right now from the bond side, so there's going to be enormous demand. When you have an inaugural bond offering like this, it's going to be a feeding frenzy. And quite frankly, I think 3/4 of the people that are going to buy the bonds aren't even going to know what this company does. It's going to be very much of a buy now, ask questions later. But what do they have supporting them? They've got very strong, stable investment grade ratings. You do not have to worry about this name going to junk. You've got perhaps the greatest investor of our generation, Elon Musk, who I think has replaced Warren Buffett. And you have $100 billion of cash sitting on the books, plus tremendous upside across a diversity of businesses. My sense is if they raise $20-odd billion, you're going to have a book size that's well north of $100 billion.
You mean the demand, the $100 billion of demand for $20 billion of supply. Just real quick, like trying to compare and contrast the equity story. The stock's down 9%, $167 a share. For the equity investor, they read the prospectus, they listen to Elon Musk, and everything that's being pitched is very far into the future. But is the kind of common denominator between the equity investors' approach and the credit investors' approach to SpaceX trying to understand the path for CapEx? Does it work the same way?
Listen, equity and credit are different. Equity is based on hope and future cash flows. Credit generally is based upon present cash flows and what leverage looks like right now. I actually do think that those are going to somewhat come together over time. This company is committed to reasonably low leverage, below 3 times. They're committing to having $25 billion of cash on the books for the foreseeable future. And there's a hope of just absolute tremendous growth. Quite frankly, it's not so different than what Microsoft or Alphabet or Amazon is doing. And just remember, in the early days of names like Amazon, they lost a lot of money too. You have to spend money to make money. This is what this company is doing. I think the bond market's going to be there to fund it. And I think the equity market, when you start thinking about valuation, as all these AI revenues in particular come in. Remember, this company is going to transition from what is a satellite data business, an aerospace and defense business, to what's going to be a hyperscaler in the sky. I think there's nothing but upside when it comes to revenues and cash flows for this business. So bondholders and credit holders will sort of all be looking at the same thing a few years from now.
Bloomberg's Robert Schiffman, senior credit analyst at Bloomberg Intelligence. Thank you very much.